who in God's green earth stood for possession for almost $13 billion worth of gold. And the mainstream idiot media doesn't say a word about it, but that's 19 straight months of this shit. Every single month, billions and billions and billions and billions and billions and billions and billions being delivered, and not a word by the mainstream. They're missing everything. The rest means squat. It means squadouche. The price gets hammered. China imports more in the first quarter of this year in silver than at any time in the history of the country as a second largest producer of silver in the world. In February, after silver got kneecapped, right? The first 2 months of the year, January and February, the largest ever 2-month deliveries on COMEX, ever. January, February. And someone stands for or in February was only 25 million ounces delivered. It was a big January. But 39 million ounces left the warehouse in February as the price got kicked in the balls. You know, I've been talking about this for over a year, ever since I had Judy Shelton on my podcast, and Michelle, my co-host, Michelle McCory, had her on as well. And she said to me on my podcast, Andy, in no uncertain terms, when I was part of Trump's transition team as his nominee to run the Fed in 2016, that 2026 would be the biggest day of his presidency, that it would be the 250th anniversary of the country, that he would indeed peg gold to the back of a 50-year treasury. Now, she's written a book on that called Good as Gold. She's all over Twitter, X. I think that's where it all stems from. And I've been using her statement to that effect as part of my thesis on how Trump brings back manufacturing. Because let's just call it what it is. We're dead in the water if we don't. We're broke. We're $200 trillion in debt. Medicare, Medicaid, Social Security, government, military pensions are $100 trillion in of themselves, 100 plus $150 trillion in and of themselves. We are uneducated. Ray Dalio recently said 60% of the country has a literacy rate under the 6th grade. Triffin's dilemma, part of my thesis, says, well, as a reserve currency, you'll always run a trade imbalance. You'll hollow out your manufacturing being the reserve currency, and sure enough, we have. The thesis is that the world needs more dollars than we can provide alone as the reserve currency. We'll use Cambodia as an example. We don't trade much with Cambodia, but they need dollars to buy oil and transact global commerce. So they sell their currency in the open market to buy ours, and the continual selling and buying over time creates a big chasm, if you will, between the Cambodian currency and the dollar. And so what happens is over time, someone says, you know, we could send our t-shirt factory to Cambodia and make 5 times what we're making. Let's do it.
What if I told you that nearly $13 billion worth of gold was taken for physical delivery, and almost nobody in the mainstream media is talking about it? While investors focus on daily price swings, some of the biggest players in the world appear to be quietly accumulating physical gold and silver. According to Andy Schectman, what we're witnessing could be the early stages of a major shift in the global monetary system, and it could have huge implications for gold, silver, and the future of the US dollar.
That's how Triffin's dilemma hollows out your manufacturing. And so between the fact that we're broke, borderline insolvent, if you were to add the unfunded liabilities, we're well north of 300% debt to GDP. There's never been a country in history that's crossed that line that hasn't either defaulted or hyperinflated. It's the line of no return, really. We don't make anything. We're uneducated, and here comes AI just in time to not rescue the situation, but to make it more challenging. So one way or the other, we have to bring back manufacturing. My thesis is centered around what Judy said in conjunction with the Genius Act that goes into effect in January and how this will play out. Let me put it to you this way. If it happens, I will be the happiest guy on the planet. Not only because I called it for over a year, saying things that most people would think are absurd, and all of a sudden are gaining traction. And I'll tell you one thing that's really given me positivity that maybe it just will happen. But I believe it. And I think it's less about my gold holdings or my gold company and more about my kids and someday my grandkids in a future where if we don't make things if we're reliant on the rest of the world for everything, from aspirin to penicillin to aircraft parts to everything, and we don't make anything, and we can't sell it to the world because of Triffin's dilemma, our currency is too strong relative to others, and we're uneducated, and AI is going to make the rich richer through massive efficiency at the expense of millions of jobs, we're in trouble. Our kids are in trouble, big trouble. And no one wants our treasuries. How do you get them to buy our treasuries? How do you get them to continue to buy into a system built on trust ever since 1971 when we closed the gold link, built on trust where no one trusts us anymore. And that's a problem. And this has been my thesis. Now, if indeed we see gold back the treasury, a 50-year treasury to start. In her book, she says 5, 10, 20, 30, and 50, but 50 to start. Redeemable in gold with zero coupon. Maybe the 50 has a very small coupon, yield, interest rate. If that happens, I think this country has a future. I mean that sincerely. My mentor, Richard Russell, used to say the Fed has two choices. They can inflate or they can die, meaning inflate or default. There's three ways to pay off debt. You can inflate it, you can default on it, or you can produce more than you consume. We are consumers, right? We don't produce. We sold off all our manufacturing. We consume more than we produce. That's a big problem in a country that is losing its competitive edge in education and in terms of indebtedness. So without rehashing what my thesis is, a very big part, I mean, the two central themes are the Genius Act and what that does, and Judy Shelton's idea of backing the Treasury. Now, one of the things that just happened, I woke up and said, are you kidding me? This is absolutely insane, because a lot of the things that I've talked about to get to that point seem to be happening. The deliveries, the massive deliveries on COMEX. You realize that in the first 10 days of the month, we've already seen almost $13 billion delivered to COMEX. Now, who the hell's doing that? Yes, it hasn't left. About 1 million ounces have left COMEX, about 4.5 billion in the last 30 days. But that 12 to 13 billion that's been delivered, so not all of it's left COMEX. So what? These people who always cash settled, always, less than 1% of contracts stood for delivery my whole career, 36 years. And all of a sudden, wicked amounts every month, billions and billions and billions, and no one's talking about it but me. Some people in the industry are, but no one in the mainstream. And these people are prioritizing numbered bars in their account rather than paper promises. Who in God's green earth stood for possession for almost $13 billion worth of gold? And the mainstream idiot media doesn't say a word about it, but that's 19 straight months of this shit. Every single month, billions and billions and billions and billions and billions and billions and billions being delivered, and not a word by the mainstream. They're missing everything. The rest means squat. It means squadouche. The price gets hammered. China imports more in the first quarter of this year in silver than at any time in the history of the country as a second largest producer of silver in the world. In February, after silver got kneecapped, right? The first 2 months of the year, January and February, the largest ever 2-month deliveries on COMEX, ever. January, February. And someone stands for or in February, it was only 25 million ounces delivered. It was a big January. But 39 million ounces left the warehouse in February as the price got kicked in the balls.
Andy Schectman says investors are looking at the wrong thing. While gold and silver prices get pushed around daily, the real story is happening behind the scenes. In the first 10 days of the month alone, nearly $13 billion worth of gold stood for delivery on COMEX. More importantly, this isn't a one-time event. According to Schectman, it's been happening for 19 consecutive months, with billions of dollars in physical metal being claimed by buyers. The same trend is appearing in silver. China, already one of the world's largest silver producers, imported more silver in the first quarter than at any point in its history. Meanwhile, COMEX recorded some of the largest silver deliveries ever seen. Even as silver prices fell, tens of millions of ounces were being removed from warehouses and shipped elsewhere. Schectman argues that physical demand is telling a completely different story than the price charts. But his thesis goes far beyond precious metals. He believes the United States faces a major economic challenge: Massive debt, declining manufacturing, and increasing competition from emerging financial systems being built by countries like China and its trading partners. That's why he has spent more than a year discussing economist Judy Shelton's proposal for gold-backed Treasury bonds. Instead of returning to a traditional gold standard, Shelton's idea would link long-term Treasury securities to gold, potentially restoring confidence in U.S. debt while preserving monetary flexibility. Schectman believes such a move could help attract global capital back into U.S. treasuries and support a manufacturing revival. At the same time, China is expanding alternative payment networks, gold exchanges, and cross-border settlement systems like mBridge, creating what many see as a parallel financial infrastructure outside the traditional dollar system. Add in rapid AI-driven disruption of jobs and industries, and Schectman believes policymakers may soon be forced to rethink how the global financial system operates. For him, the massive movement of physical gold and silver isn't random. It could be a signal that major players are positioning for a very different future.
Pardon my French, right? Down on the ground crying is the price, and someone stands for delivery for 25 million ounces at the time, 26 million, about 1.4 billion or whatever it was, but then 39 million ounces, 2.9 million pounds leaves COMEX on an armada of semi-trucks. Where the hell did it go? 4 billion in silver, where did it go? Why does no one talk about that? Why is that not more important than the Fugazi price that is a tool of misdirection? Price misdirects you. Deliveries betray the price. And anyways, getting back to Judy Shelton and her July 4th, that's where this all stems from. She said he's going to say something about it July 4th. So one thing that happened about a week ago that I think should add a little bit of credibility to all of this is a man named Paul Winfrey. I don't know if you caught Paul Winfrey or his significant.
I didn't. Yeah. Let us know about it.
So Kevin Warsh's key policy advisor, first person that he brought on board is Paul Winfrey. He's a conservative economist. He is now a key policy advisor to the new Fed chair, Kevin Warsh. Okay. He is the president and CEO of the Economic Policy Innovation Center. He's a former Trump White House deputy assistant for domestic policy. Okay. And he's an ex-Heritage Foundation scholar. He's one of several economists that wrote a report called Project 25, and they all took one chapter, and his was chapter 24, the chapter on the Federal Reserve. He seriously explores in this chapter returning to a form of a gold standard to fight inflation and the boom and bust cycles that are created by the Federal Reserve. And he specifically highlights gold convertible treasury instruments, AKA gold bonds, as a practical transitional tool. And that's Judy Shelton's idea. And now the first guy Warsh brings on is a dude whose one chapter is on the Federal Reserve and gold-denominated bonds. Interesting. So is it going to happen? I don't know. And I don't think it's game over if he doesn't say anything about it. But I do believe that it's time for him to say something, because at the same time, the Financial Times 2 days ago came out and said China tees up digital payment system to compete with dollar. In other words, they are now releasing mBridge. I've talked about mBridge for 3 years. mBridge is the cross-border payment system that was designed by China, Hong Kong, Thailand, United Arab Emirates, and Saudi Arabia. And when you think of the expansion of the Shanghai Metals Exchange and the expansion of all these exchanges, now the only one that I'm not sure on is Thailand, but China, you have the Shanghai Metals Exchange. Hong Kong, you have the new exchange that was just built in Hong Kong. United Arab Emirates, you have an exchange in Dubai, and the Shanghai Exchange is building a parallel exchange in Dubai as well. Saudi Arabia, the Shanghai expansion has already finalized in Saudi Arabia. That vault is done. So you got all of these countries that have built this parallel system that all have gold vaults that will all connect to one another through the expansion of the Shanghai Metals Exchange all the way into the Belt Road. The world is moving to a system where gold will be integrated into the monetary system. And the beautiful part about Judy's idea, and he highlights this, he talks about, he being Paul Winfrey, that the beauty of the gold gold-backed treasury is that it doesn't stymie or stifle monetary policy, where if you have a true gold standard, you can only expand the money supply at a certain level as per how much gold you have. Here you can do whatever you want monetarily, but what gold will do, and its backing of the Treasury, it will signal to everyone, well, your monetary policy is asinine or it's really good. Because the higher the price of gold goes, the more benefit it is to those that are receiving that final payment in gold. And while I'm more than happy to once again go into my theory with you, I will just simply say that July 4th is a very big day for me, and I could see me staying up all night July 3rd, waiting for this event July 4th with red eyes and, like just praying that because if it does, it might be the best call I've ever made. And I think it truly gives hope to this country in a way that I don't think people quite understand, because let's just call it what it is. We're broke, we're insolvent, we make nothing, we're uneducated. And here's AI just in time, and no one wants our treasuries anymore. And if we don't do something, I don't know how any of us as dads, you and I, look our kids in the face and say, you two have the same level of chances of prosperity and the same blank slate that we had. And I think it's hard to say that now. I don't think it's as the world is a very different place, and it's getting much more difficult to find your place in this world and make your mark. I was watching a show just the other day. The guy, he's like, look, I just graduated with the best possible degree you could have until now, and that was a computer programmer for, a software programmer. And all of a sudden, my job is meaningless because AI does it like that. And so all of these jobs are changing. There will be other industries that come out of AI and other opportunities, but many of the industries that people have spent college career learning, like accounting as an example. Who needs an accountant? My son was getting paid money, 80 grand by Price Waterhouse to analyze a balance sheet for a real estate investment trust. He works for me now, but before that, why does Price Waterhouse need to spend 80 grand for every junior accountant to analyze a balance sheet when AI says, oh, by the way, that's done?
Yep.
And the world is changing. We must bring back manufacturing. And I think my thesis centers around gold-backed treasury bonds and the Genius Act and what that does to the front end of the curve and how this all intertwines. But the moral of the story is, if he does say that we're going to issue a gold-backed treasury, now here's where it gets interesting. You had mentioned to me that there's these numbers, this revaluation that everyone thinks is coming. The Treasury Secretary said, we're not going to revalue gold. And I don't think they need to. This is where Tether comes into play. Tether, and all of the issuers of the soon-to-be new dollar stablecoin that will come out in January, the Genius Act. What has Tether been doing for the last 3 years? Well, they bought more gold than anyone in the world but the Central Bank of Poland.
They're becoming a gold accumulator. They kind of look like a central banks kind of, to a degree, with that philosophy.
Right. And who's the CEO of USA Tether, who is the Genius Act component of Tether? Well, that's none other than Bo Hines, who was Trump's crypto czar through August.
Whether you agree with Andy Schectman's outlook or not, one thing is clear. The world's financial system is changing faster than many investors realize. As gold deliveries surge, silver demand explodes, and new monetary frameworks emerge, the biggest opportunities may belong to those paying attention before the headlines catch up. If you enjoyed this breakdown, make sure to like, subscribe, and turn on notifications for more updates on gold, silver, the economy, and the future of money.